Good morning, traders. It is Monday, the 27th of November, 2017. It is 7:30 a.m. Chicago time, 8:30 Eastern. Thanks for joining me again for another week of trading. Last week was broken up by the Thanksgiving Day holiday. Thursday was a complete holiday, although the futures traded. But Friday was a partial day, and I'm keeping the Friday data for the futures because the equities traded till 12 Central, 1 Eastern. So Friday's data is valid. The new all-time high at 2603 in the ES, for example, is a valid high. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning looks mixed. We've got gold at the top, trading at $1,295 even. The Japanese yen is up 44 pips, the British pound up 40 pips, and the U.S. Bonds are higher. It is a mixed bag. It looks like there's allocation to safety here in the overnight session, with crude oil lagging behind down 58 cents or 1%. But overall, it truly is a mixed bag. I mean, whatever's down is only down a few basis points. Whatever's up is up a few basis points, except for the yen and gold. So we're coming into a market that is all mixed up this morning. As far as the week ahead, there's a lot on deck for this week. Today, we get new home sales in the U.S. at 10 Eastern. No speakers that I see on my calendar, but for the rest of the week, tomorrow, we have some numbers from the UK, the Eurozone, Germany, US advanced goods, wholesale inventories, FHFA, housing prices, as well as the S&P Case-Shiller numbers, consumer confidence index, and then we have Fed's Dudley and Harker. Busy day tomorrow on the calendar. Wednesday, UK M4 money supply, Eurozone consumer confidence, and German CPI. US has GDP, PCE core, pending home sales, Fed's Dudley, Yellen, Williams, and Beige Book. Wednesday's another busy day. Thursday, again, UK GFK, German Eurozone unemployment, Eurozone CPI. We get jobless claims as usual, and we get personal income, PCE core, Chicago PMI, and then we have Fed's Kaplan, we have ECB's Prate, Mersch, Heikkinen, and the OPEC meeting begins in Vienna. Friday, we have the German and Eurozone manufacturing PMI, US construction spending, and ISM manufacturing, as well as Fed Bullard, Kaplan, and Harker. So again, throughout the week, steady flow of potentially market moving news in terms of economic releases or Fed or ECB speakers. That's what we're looking at for the week. I'm not going to go over what we did last Wednesday, the last day I did a trader buy. It makes no sense at this point. Instead, it makes more sense to take a big picture overview of what we've got. Here's the composite chart, the daily composite chart. Each bar here represents 1 day of trading. This is day session only, RTH only, and what we see here is a market that continues to power up. So here it is. We just continue to power up. You see it climbing and climbing and climbing. We broke out of the balance we had from the end of October till last week. We broke out of that on the 21st, which was Tuesday. We traded Monday in a tight market, and then Tuesday we pushed higher. We broke higher, and then Wednesday we had an inside day. So I started to create this composite here, which has a point of control 25.98. And then Friday, skip Thursday, and then Friday we extended that up in a shortened session. and overall the market is just not seeing any downside, any dips, as you see back here, any dips back here, there, there, you name it. We dip down and it's bought right back up. It's just a way of the market right now. It's a market that's not that's pricing the future higher than where we are now and continues to do so. This morning we're trading right up against 2600. We're trading inside of Friday's range, and we continue to hold steady near highs. It is more of the same as far as I'm concerned. The S&P minis are up three ticks so far, but we continue to hold higher prices and see value in that. Overall, uh, I was hoping for a little less monotony. I was hoping the market would start to push down, power down back here 2 weeks ago, power down and get into this low volume node here. No such luck. It continues to power higher, and it's more of the same. Okay. This is the last week of November. We're coming into December, the holiday month, and things are likely to slow down even further. So we'll see. We'll see how that plays out. With that being said, let's take a look at the weekly TPO chart. So let's collapse this. This is last week. The weekly TPO chart just continuing again after breaking the one-time framing higher, or we were one-time framing higher. After breaking that, uh, we decided to continue higher, and then we gapped on Tuesday. We have a nice big gap zone underneath us, and we've traded imbalance Tuesday, Wednesday, and we broke a little bit higher on Friday. So nothing new to be seen here in the weekly, other than the fact that long-term buy and holders are getting paid currently, and it's the kind of market that we're in. We tend to come back and fill these gaps, as you see here, back here. We tend to come back, fill these gaps, splash down, and continue higher. So I'm looking forward to that. Those are the days where I find the opportunities to be easier, but overall, not much to write home about. Here's the 15-minute. This looks noisy simply because we've got so many days with where the auction is just unfinished. Each one of these lines, these broken orange lines are open closes, naked closes. So the market closed and it never retested that. As long as it doesn't retest that close, this line continues to show. And then the pink ones are naked points of control. These are the most accepted price for the day, and the market generally touches those the next day, depending on where it opens. And we've got a lot of these that are still naked. If you look back, a lot of nakeds sitting out there as the auction is operating in a one-way fashion, and so it leaves us with these noisy kind of things beneath us. The key areas below, we have an important point of control here at 81.50 that we toyed with, not last week, but the week before. Very important area. We've gapped up, and then we have a gap zone underneath us here. If you have the flex levels, turn them on. You can see the gap zone with the mid at 25, 86.75, and we're just waiting for that to get filled, or we're waiting to buy and hold on a dip. On the next dip, the market is opening inside of Friday, but is higher than last Wednesday, the last full session. So from here, it's really hard to tell which direction it's likely to take. I'm going to take a quick. Well, let's look at our plan for today. Oops. Let's look at our plan for today. Very tight on Friday, of course, being as it was the holiday. The expectation for today, the primary scenario, I'm expecting a quiet open. I'm looking for it to dip. I'm looking for it to push higher. I'm looking for a dip down to 2600. I'm looking for it to push higher, take that overnight high out, consolidate, and hold steady. There's a potential that we would test this dual measured move high at 2606 quarter and half. But that's the primary scenario right now, is that we would consolidate early on and potentially dip down a little bit and then continue higher. I'm looking for an impulse up to ride with. Trades are very tight to the long side these days, but that's just the nature of the beast right now. If it fails to do that and starts to push higher and fail back down, which is unlikely, I'm looking for an impulse down that tests the Friday low and then targets 25.98 as its key price. That is the MC point of control since the gap up. That's the secondary scenario. That's how things are shaping up. I want to talk briefly about the Russell. Now, the Russell was for a long time, and you probably see me draw this over and over and over. For the Russell for a long time was at a downward channel that broke even lower and formed an even deeper downward channel. And the expectation is it was likely to dip down below and into 1440. I was looking for it to fall below 1460 right here, the composite low volume node, push down below to below 1440, and then hold steady before it bounces up. Well, it bounced up, and from the low of 1453 to the high of 1526, that's a 5% move. It's a 5% move we've made since the 16th. So this has been the laggard. It's been a good short. The ES has been buy the dip. The Russell has been sell the peak. And sell the pop. And so this has stopped though, and it has created new all-time highs. So what we've had in the Russell is a bull flag that's been forming, and it finally pushed higher. And so that's what we've got in there. The Russell looks weakish coming into today. It traded lower on Friday than it did on Wednesday, and it looks like it may target 1503, 1500 this morning. So I'm looking to the short side in there. Anyway, that's all I have for you. I'm going to leave you with that. I'm going to remind you again to do what you need to do to win the day. What is it that you need to do today to feel like you've won the day and actually did something useful, even though you didn't make money possibly? What do you need to do to make sure that you took advantage of the fact that you're sitting in front of your screen and you've put in your time? Okay, so figure that out. What does it take to win the day? Good luck.